Alright, I'm going to bust a trading myth and explain why it is that you can't maintain the same percentage growth on account month on month on month. And part of this comes down to where you are within your career. So to start with, one of the reasons that you can generate large percentage growth month on month early on in your career is simply down to the size of your account. And this relates very similarly to special relativity, E equals mc squared. As your mass increases, i.e. the size of your account increases, in order to accelerate that, create a percentage gain, you need exponentially increasing amounts of energy. So you need ever increasing new ideas, new methods, and increasing size. This is a very difficult thing to do because to get to a point where you have a large mass, a large account, you will have already generated high numbers of skill sets, many different trades. So the ability to generate an ever increasing number of these is very, very difficult to do. And this is one of the issues that in fact you can't increase your account on a percentage basis, so an exponential growth curve. More realistically, growth in your trading is impacted by diminishing marginal returns. Think about this in terms of performance in any sport. If I start running today, I could get better at running reasonably quickly, simply by wearing the right shoes, improving my technique. All of a sudden, I could get some gains just simply because my fitness would increase. But over time, I can't improve my pace at the same rate that I could do at the beginning. Quite simply because early on, what I'm doing is I'm basically closing a skill gap. If I'm not a runner, I can very quickly get better just by improving some basic skills that I don't currently have. Once I am good at running though, it becomes very, very difficult to improve in any great degree, simply because I've closed all those gaps and it's marginal improvements that can be achieved. Now the impact of this could be quite significant in terms of performance if you were competing, but in terms of the relative pace that you can increase becomes very, very difficult. And this is what happens in trading. New traders create big growth in their accounts quite simply because what they can do is close skill gaps. If they didn't have a certain skill, they were not making any money. As soon as they have that skill, they can now suddenly increase their capacity to make money. Take, for example, a trader trading a more volatile period. A new trader can learn how to trade that period from somebody who is much more senior. The senior trader has already got that skill set and can make decent money during that period. The junior trader learns the skill set. Now, they can apply this to less volatile periods, but still get quite a significant growth in performance simply because they now have a new skill. With a senior trader, and you can see this in the charts, a senior trader will perform very, very well when volatility picks up. Well, this trader will, simply because he has that skill set. So February, March, major improvement in performance. Junior trader, not so much. The junior trader can learn from the senior trader, close that skill gap, and now they can trade more volatile periods. For the junior trader, they now have a new skill that can be applied during summer, which is still volatile. But for a senior trader who has that skill set already, the shift in summer to less volatility than there was in February and March means that his performance cannot reach the same levels, simply because he's maximised the ability to trade those highly optimal periods and can't then achieve the same amount in a period that doesn't provide so many opportunities. That's the key difference. That's why you can create major growth in your account early on by closing skill gaps. What you can't do is continually close skill gaps because you can perform best when there are more opportunities. Take those opportunities away. If you are maximizing those opportunities anyway, an experienced trader can't maximize an opportunity more than it can be maximized. And so for that reason, when opportunities are lower, senior traders have a slower growth path, whereas a junior trader may well have learned a new skill and can then perform. I explain different environments in numerous other videos, and we will still workshop on this as well. So if you want to come along to that, hit the link. Also, further videos, hit subscribe, and I'll see you again in the future. Take care, guys.